So, how was your trading week? Did you guys place any trade last week? How was your trading week?
Well, I can say small improvement. With time, it will get better.
Yeah, with practice, you guys will get better. That's just the secret behind trading. With more screen time, you get better over time. So no one was born as a trader. You all know now. You have to put in the work. That's it. So today I will just do let's just do a quick market breakdown together. So looking at gold, if if you'll be attending my classes, you all know I talk much about market structure, right? So market
Yeah.
structure is very, very important. And why do I keep on emphasizing about market structure? Market structure is mostly like just basically how the market moves, right? If you can identify the structure of a market, your work is completely let's say it's half done. That market structure is basically what the technical analysis is basically what the technical analysis. So market moves in waves, right? Higher highs, higher lows, higher highs, higher lows. That's what in an uptrend is happening. That's in an uptrend. Then downtrend, lower lows, lower highs, lower lows, lower highs, lower lows, right? So so that's that. Now looking at both from the higher time frame, I prefer going to the higher time frame to identify your structure, right? So So looking at good, what do you see? Is this an uptrend or a downtrend? Just look at the structure. Is this an
I
uptrend
think
or
it's an
downtrend?
option.
It's
It's
an
an
uptrend,
uptrend.
right? That's
Yes.
good. That's good. So let's say if I want to start analyzing from this side, because you have no business analyzing backward. So you have to have a point from where you will start analyzing from, either from the last week price action or from the last month price action, depending on the kind of trader you are. So let's say I want to start analyzing from August 25 from this zone towards the direction. Now markets has been giving us what? Let me clear these things. Okay. So let's say I want to start analyzing from here. We are having what series of what higher highs, higher highs, higher lows, 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 higher highs, higher low, higher high, higher low, and then higher high. So we are now at what? At a higher high. And what are you expecting now? A higher low, right?
Yeah.
Definitely towards this direction, a higher low to this level, this 4 hour order block. So you see, and from last week, you can even see the price is already what approaching this order block, right? So price is what coming towards to give us a new what a higher low. We've gotten our what our higher high. Now price is coming for what for a higher low.
Hello.
So that's basically how the market moves. If you can identify the movement of the markets, you can then capitalize or where to what to get your entries and to get your exits. So we've identified market to be what to be an uptrend, and we've identified what market to be what giving us series of what higher highs, higher lows, higher highs, higher lows. That's an uptrend. Now I want to go to a lower time frame, let's say 15 minutes. Now, having this at the back of my mind, I've what identify what the market is doing on the higher time frame, right? There's what we call top-down analysis, but I don't want to talk about top-down analysis. But in our subsequent classes, I will talk more about it again. So top-down analysis is basically starting what analysis, your analysis from a higher time frame. It can be monthly, it can be weekly, it can be daily, down to what to your lower or your entry time frame. So now I'm on my 15-minute time frame. I prefer 15 minutes these days to get what to capitalize on what the market movement. So I'm looking at what this charts here now on the 15-minute time frame. And from my 4 hour time frame, that's my what? My trend or my directional bias. I know that the market is bullish. So whatever I'll be doing in the market is what? Is look for opportunities to go with the trend. That's what look for opportunities to buy. Right? any sell in the market now is just like gambling because there's what we call counter trade. If you are going against the trend of the market, there is a 50-50 chance of the market what taking you out or of you taking losses, so many losses than you what going with the market. Now, let me give you this secret. If you are always going with the trend, you will find it hard that your trades will hit SL. Have you noticed this? If you study very well, if you're always going in line with the trend, your trades will hardly hit SLs if you can identify what the right point of interest. So have this at the back of your mind. Never go against the trend. So if you see me like going against the trend, it's either I'm just going for what capitalizing on a reversal like this one now. I can go for sell on this trade, but it's still gambling because I don't know when the market or the market makers can decide to push the market up again in line with the trend. But normally the market will always what come back to your point of interest, but you can't say that's trading for you. It's not 100%. The market makers can decide to just wake up one day, push the price a little bit. The sellers can decide to push the price to this FVG, and then decide to push the price back up without reaching my order block. So as an order block trader, I may miss out on this trade unless the market makers, we were just speculative traders, we follow the bigger guys with the money. Then they have the money to move the market. We, our money, how much is $1 million? $1 million is too small to move the market. So these guys, they play with huge capitals. They are the ones. So you always study the market, know when they want to enter, know when they want to leave. And how do you know when they want to enter? That's by looking at what other blocks. These guys, they create these other blocks to tell them that okay, we created this another block here. Now let's push price back to this other block so that we can buy cheaper and begin to ride the wave. Or we can, after riding the wave, okay, we are okay. At this other block, let's begin to sell so that we can take our profits and then dump on people holding the bags. So that's basically trading. It's basically between battle between the buyers and the sellers. So that's that. Now let's do a breakdown on the 15-minute time frame. So we're having series of higher highs, market breaking structure to the upside, break of structure. So after this break of structure, you look for the other block that gave rise to this break of structure. So markets did not come back to this other block. So as an other block trader, we've missed out on this trade. Then another break of structure here. Break of structure. And then markets give us an internal shift. That's like a retracement to come back to this other block. Or now this is more like a higher high. From here to here is a higher high. So instead of you saying high, 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 no, you can just like take all this as a single movement. It's still the same thing. It's part of this single move. Now this is like market telling you this is a higher high. Then I'm coming back for a higher low. That's what the market did here. But for this higher low, it was supposed to like come to another block and tap into it. But instead, markets use either a what? A heavy G. Just
The
like what I
resistance
was
is
explaining. The sellers can just wake or the buyers can just wake up one day and decide to push market from any level in line with the trend. So you waiting for the market to retrace back to your other block, you will miss out on this trade. So they decided to push the market and didn't allow the market to push down to your other blocks. That's what I'm trying to say. So it's better, you should always go in line with what the major trend. So if I'm selling now, expecting market to take profit from me, market would have taken me out because I'm counter trading. I'm going against the trend of the market. So break of structure. This is also a break of structure. Break of structure. And then the last break of structure. So from here, we have a market structural shift. Market structural shift. and then continuous break of structure. Now market shifted direction from what? From an uptrend to a downtrend. So you always have an uptrend and a downtrend. The downtrend is more of like a retracement back to your what? To your point of interest to give you what? Your swing low. We can have a swing high. The swing high or the what? Or the bigger movements, which we call what do we even call it? Uh, Leila, remind me. I said we have two market movements. The impulsive move, right? We have the impulsive move, and then we have the retracements. Can you remember? So what do you do as a trader? You should always wait for what? The impulsive move. Always capitalize on taking the impulsive move, and then the retracements. You can decide to scalp on the retracement, but it's highly is not advisable. You can see the retracement is
Yeah,
always shorter than the impulsive move. Impulsive,
that's true.
retracement, impulsive, then retracement. You can see?
That's what I was about to ask one day, but why don't we just take entries to that through the retracement move?
Okay, you can take entries let's say, you can take entries on the retracement, but if, as I said, is better, you should go what? Go in line with the trend. It's just like, it's not like a momentum. If the trend is uptrend, right?
Mm-hmm.
It's better you should go with what? Uptrend. Any trade you want to take, always think in line with the trend. Are you getting it? Because these guys,
Okay.
that like it's just like momentum. Let's say you go surfing, right? You go surfing. The wave is coming, the wave is more stronger than if you are going against the wave. You can see like sometimes the wave might push you back or resist. Are you getting it? So
Yeah, yeah.
that's the same thing with the market. It's just like you are trying to fight the trend with your little capital of $10,000, $100,000. They'll clear you because these guys are playing with big money, millions of dollars, billions of dollars. So it's better you should what? You should, if they say, there's this saying, if you can't defeat the Romans, you should what? You should join them, right? So instead of
And do
you
what they
trading against them, it's better you go with what? You go with them. So when the market is uptrend, it's better you should what? Any trade you are taking should be what? Should be buying, 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 buying. And you will realize that 70% of the time, you're always right. You hardly find it, especially if you get your point of interest right. You hardly find it difficult for you to be eating SL. But if you are trying to go against the sell, let's say the market is uptrend and you are looking for selling opportunity, selling up, you realize that in fact the market will move small in your favor and eventually reverse. Just like this one now, just like this schematic diagram. Yeah, I have example here. One example. One sell setup that I dropped last week. Is it last week? Where is it? I think it was around this area. Yeah. Aha. Market gave me a what? A market structural shift. And then I have what? I have another block here. If you remember, I said it is a risky trade, right? Why? Because
yeah,
we are
yeah.
trying to take a trade against what? Against the trend. You can see technically this is like trying to move down because it's like still okay at like it's actually moving down. Markets can actually come back to clear the liquidity, to clear this liquidity. This is more like an inducement to this other block. But as I said, you are trying to like fight against the what? The actual trend of the market. It's just like you trying to fight million people, 1 million people, you as one person fighting against a million people. You can see you will not win, right? They'll win you.
Okay. It means if you see another block in an uptrend, like a bearish other block in an uptrend, you should not take that one, right?
Thank you. You should not take it. If you want to take it, think twice. Think that, okay, even if I'm taking this trade, there is a 90% or 70% of me getting stopped out, right? But if
Yeah.
an order block, a bearish order block in an uptrend has a low probability, whereas a bullish order block in an uptrend
In a
has what?
downtrend.
A higher probability. Are you getting it? So
Okay.
it's better you taking what? Bullish or buying opportunities during what? During an uptrend. And if you see a sell setup in an uptrend, you should think twice that okay, even if I'm taking this sell, I'm just taking it just to, just for fun. Are you getting it? I'm not expecting anything from it because I'm trading against the trend. Right? So if you notice, there's this setup I dropped. I think I have it here on my let me look for it. I don't know if I can find it. Aha, see it here. Can you see it? Right?
Yeah.
Look
Yeah, I
at
can
it.
see it.
I dropped this. I said, okay, this is a risky trade. Why is it risky? Market actually came to my what? My order block. And what do you see? Market eventually aggressively broke through the other block. It didn't even like touch it and react from it. It's just like market got very close to it and pretend like it's about to like fall. But what do you see? Market aggressively broke through it. Are you getting it? So
Yeah.
it's more safer for you to what? I didn't mean markets return all the way to you can see I was targeting this other block. I was trying to capitalize on the retracement to this other block. But just like I said, the sellers or the buyers can decide to wake up one day and decide, okay, we are okay with this price. Now let's push price towards the upside. Are you getting it?
Yes.
They are the one with the sales and they are the one with the money. So they can decide anytime at any point, especially if you are trying to like trade against the trend. So you are more safer trying to take a buy from here, targeting what? This higher points of interest or this liquidity point. So you are more safer taking buys in an uptrend than what taking sales and what on an in a downtrend. I don't know if I'm
You
making
know,
sense.
I can hear you. I can hear you, but the screen is no longer active. I don't know.
The screen is not active.
Yeah, the
Yeah.
screen is not active. I thought I was the only one. So,
Since when?
Yeah, now it's
uh,
active.
yeah,
When
it's
you wanted to
active.
show them your
Oh,
color.
sorry. I was only sharing my what's it called? My trading view. I don't know. Well, so does that mean you didn't see the chart I was trying to show you?
No, we didn't see. I didn't see it.
Oh, yeah. This how the dress will be ready. This minutes. You say I'll wash you, I'll bath you, I'll clean your nose. Don't worry, you can see the reason. Papa. Ah, how is this thing? Oh God. Nigga, go and help your boss. Sure, you want learn computer science, go and learn. Now,
But
I'm
was
listening.
it the trade? Uh, was it the trade on Euro? The
No, no,
trade we
no.
shared on Euro
Not
JPY.
you. I don't know what's wrong with this thing, though, Abeg. Like, oh God. How did they even do this thing? I didn't
You
come
can
on
hear it
vex.
now.
You say, oh, let me try this. What's wrong?
My
All right,
boss.
all right. Can you see the screen now? Can you see the why is it taking me back? Can you see the chart? Can you see the chart now? Yes, sir.
Yes,
Yeah.
yes, yes.
That's good. That's good. Can you see the XASD trade I dropped in the group? Now I was
Yeah.
trying. Why is it that like this is a low probability setup? Why? Because I'm trying to like trade against what? A bullish market. The market is what? Is clearly an uptrend. And I'm trying to what? Take a sell in an uptrend. Can you see it? So there is 70% of this trade taking me out or me eating stop loss on this trade than if I should take a buy. Let's say market actually was here or retrace to my other block, right? If market should retrace to my other block here and I should take a buy from here, there is 90% of me winning this trade. Why is it so? Because I'm trading in line with what? The market trend. But if you can see, I'm trying to counter trade. There is what we call counter trade. If you are trading against the trend, there is 70% chances. There is 70% chances of what? Of me eating stop loss. Are you getting it? It's just like
Yeah.
the reason why I wanted to take this trade is that I was trying to like capitalize on the retracement back to this other block. Can you see another block here on the 15-minute order
Yeah.
block?
Yeah.
So
Yes.
I saw a sweep of liquidity. There's what we call sweep of liquidity. Market swept this high. There is this session high. I think this is New York session. There is a New York. I'll show you the this thing. The what's it called? This the what's the thing? Oh God, I don't know what's wrong today. Uh, indicator I use for
For the
this.
session.
Yes, for session highs. You know, liquidity, there are liquidity are in several places. From our classes, Leila, if you can recall, I said we have trend line liquidity, we have range
Yeah.
liquidity,
Yeah. Equal
double
high,
bottom,
equal low.
thank you, and then we have range liquidity, right? So
Yeah.
again, now there are places where these liquidities are sitting. They are sitting what? At your swing low. This is a swing low. Liquidity is sitting below this zone. Why? There's what? Liquidity sitting. There are people having their stop losses below this other block. Like me now. If price should come down here, my stop loss will be where? Below this low. Then this is also a point of what? A liquidity zone. Are you getting it? So liquidity, there is liquidity here also. Swing lows and swing highs. There are liquidity sitting there. Are you getting it? There are swing liquidity sitting at your swing lows and your swing highs. So this is a swing high. And what is the market came? Broke this level, this swing high. What did and after breaking it, what did you see market did? Market fall back aggressively. So how do you identify liquidity or a sweep of liquidity? Market will take out a previous high or a low and then aggressively change direction. Now you see, after market swept this high, market then fall down. So I saw this sweep of liquidity, market structural shift. That's internal market structural shift, though this is not a clear market structural shift actually. So that's why this setup didn't play out. Then I saw my inducement and then my other block. I was expecting market to tap into this other block, then fall down to what? Fall down to this my other block here, and then take the buy again. But why is it a low probability setup? I'm trying to trade against the what? The trend. I didn't mean the trend
Okay.
market was there, and I got the trade from this other block. It will play out perfect because I'm going in line with the trend. So I don't know if you guys are getting what I'm trying to explain. So it's better you trying to
Yeah.
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 trade in line with the market than you trading against the trend. Are you getting it? So and
Yes.
then impulsive move, as I was explaining, since we are in an uptrend, our impulsive move will be up. Then retracement is just like a retracement to your other block or your points of interest, right? Let's say there is another block here. Then another impulsive move. So if I should get in from there, I'll be catching a what? A very good high risk to reward. So it's better as a trader, know the beginning of impulsive moves and know the what? The end of impulsive moves. So I will take my profits here. That would be what? 1:5 risk to reward. Then wait again. I'm not interested in anything the market do at this zone. I'll wait for the retracement again. Then know the what? The beginning of another impulsive move. Let's say other block here again. You can see. I'll then follow the what? This sweet ride. You can see how long it is. So that's impulsive move. And then the retracement to your other block. Sometimes you can decide to like take trade based like on the retracement. But just know that there's 70% chances of you what getting stopped out because it's a retracement and you are going against the what the trend of the market. So you have a 70% of what market reversing on you at any point and then taking your stop loss. So I don't know if I'm making sense. I wanted to
Yeah.
talk
Yeah.
about market structure actually. But this is also part of market structure. So market structure is basically the structure of the market, right? You can see market came, reacted, and then what? Aggressively broke through what? Through my points of interest. So now looking at this zone, if I am you, what would if you are me, what would you do? Are you going to like take the sell to this
You
other
wait for
block?
replacement.
You wait for the
So I'll wait.
retracement, right?
I'll wait.
Yeah,
Yeah.
Yes.
wow. I'll wait for the retracement. So This is more like a signal again. If in case you want to trade good. Why is the screen not moving now? But what's this now?
So I was confused about this. Can you differentiate between a point where you can trade from an order block or fair value gap? Because it might come at times you place your trade on a fair value gap and go below and touch the order block.
That's good. That's a good question. Actually, it depends on your own style. But for me, I prefer trading from other blocks. But there are those who I purely trade other block. I don't trade fair value gap. Are you getting it?
All
I
right,
don't
because
trade.
sometimes you might not reach the order block, you will just end at the fair
Yes,
value gap and go.
that's good. I don't, that's like it happens. The market is not 100%. There are times you will miss out, and there are times you capitalize, like you get in. That's just it. So if
Okay.
a market did not tap into my other block and leave without me, I will not chase it. I will not chase after it. It's just like a missed trade. I missed that trade, and that's fine. And there is more opportunity to come in the future. I'll have another trade again that will come back to my other block, take my orders, and then ride with the market. Are you getting it? So stop chasing the market. And
Okay.
again, focus on only other blocks. For me, my strategy, I focus only on other block. If you go back to our previous classes, the videos like the classes we treated, you can see I only take my trades from what? From other blocks, because other blocks are 100%, or sorry, it can be 100% and 99.9% where the market makers usually place their orders. They don't place their orders at what? At fair value gaps. Are you getting it?
Okay.
Yes. So they basically place their orders at what? At an order block. That's why they call it what? Order block. But due to inefficiency, if you can remember from our previous classes, I said we have an efficient market and we have what? An inefficient
Inefficient.
market. Do you remember?
Yeah.
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 So the market can be inefficient sometimes and the market can be what?
You will not reach there.
Efficient. Are you getting it?
Yeah.
Like now, this is an inefficient market because market there is this imbalance here, and markets have not come back to what to fill my what to fill this other block. Market has to come back to fill this other block. Are you getting it before
Yeah.
it go back? So that's it. That's efficiency. But now the market is still inefficient. So market has to come back to this other block, and then what begin to ride with the wave. So this is more. This is a signal also. You can even place your what is it called? Your pending orders to take this trade. Then targets what?
But
The
do
recent
you
times.
do you to place the trade before it comes and reach there, or you wait for the confirmation before you take it? I don't know.
I prefer limit orders actually. I don't like placing trades instantly. I prefer limit orders. I don't like to be
Okay.
watching the markets and pressing my button. I can be emotional and and over risk. I get in it.
All right.
But yes, but if I place a limit order, the market will come back. In fact, it will take my order at a very nice price. In fact, at the best price. But if I try to like
The
buy
benefit.
at the market's price, the market might be, might be volatile. I might buy it from an expensive zone. Are you getting it? But limit order, the market will come back to my level, pick it up, buy from my level. Are you getting it? Nothing has spread or whatever. It will take my order at the best price. That's one benefit of using limit orders instead of using or doing market orders. Market orders. What if you're emotional and you put over risk on a
Mhm.
particular trade? Are you getting it? So I prefer limit orders actually. So are we still together? Hello?
Yeah,
Yeah.
yes.
Yeah.
That's good. That's good. That's good. So this
It's
expect
silent for a while.
I'm expecting market to come back. This is a break of structure, right? So I can share this on the, but still I might decide to take this sell because my setup actually I showed up.
It's quite long now. The distance is quite long, so
Yeah, I might
it
still
is
decide to
it
take
can
the
be
sell.
tempting
I
to
might
take
still
it.
decide to take the sell to this other block. Are you getting it? So, but still, the other block might fail because we have unfilled other block here. But let's go to a higher time frame and see if the zone is actually filled up. Okay, the zone has been tested. Can you see? It's already tested. So market will not come back to this other block. Okay, I remember I placed an entry here and the market missed. Yeah, I remember. So this other block, market will not come back here again. But instead, market will use this other block. Are you getting it? Am I making sense? This zone has already been what? Has already been tested.
Yeah,
Are you
yeah.
getting it? You
Okay.
can see?
Mm-hmm.
Market has come back, tested it. Can see this other block on the higher time frame now. Can you see it? But on the 15 minutes or 30 minutes, it's
Yeah.
showing me that it is not it has not been what? It has not been tested. I get it, but it has market has already been tested. Like it has already been tested. So market will probably use this what? This other block. This is a high probability setup. But still, even high probability setup can fail you. So I get it. So any other questions? Steve, do you have a question for
Understand.
me?
Yes, I do. My question is on POI
Okay.
because I think that's where me personally, I've been struggling a bit because my analysis can be very good, and once you get the wrong POI, that's it. The whole analysis is just has just gone to waste.
That's good. That's
So
good. Okay. Uh, that will take much of our time. Are you getting it? If I'm to explain that now. But don't worry, in our subsequent classes or during your our mentorship class, I will explain it to you clearly. Because if I'm to
all right,
explain now, it will take much of our time. We only have 2 minutes or 3 minutes left or thereabout.
all right,
Yeah, so don't worry, I'll
all right.
explain it to you in our subsequent classes.
It's okay. It's
Yeah.
okay.
All right. So any other questions?
None.
Mm.
All right. So, Tom, thank you guys. I'll see you guys next week for another
Thank
session.
you.
Okay. Good night, guys.
Okay.
All right.
Nice.
All right. Bye bye.